So Bitcoin started to dump yesterday, and we're going to talk about the reasons why in today's episode. Don't you hate videos that start that way? I hate that. What's up? What's going on, guys? In today's episode, blah 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 blah. I hate those videos. Anyway, but yeah, we're going to talk about why it dumped. But it started yesterday, and I was actually thinking about buying some Bitcoin. Where's my little marker here? Go away. All right, so we'll pull this here. So when I saw this candle, I was gonna buy somewhere in here yesterday. I didn't get around to it. I'm glad that I didn't, because it dropped more. We're still in this wedge, so that's expected. I expect it to trade within this wedge until it breaks out to the upside or to the downside. But today I'm gonna buy some more right here, which works out because I was just about to. I had an eBay order that I have to drop off at the post office, so I was gonna, while I'm out doing that, I will buy some more Bitcoin. I'll stop by the ATM and get some more. Hopefully, while this candle is still down here. But why did it fall? There's this article here that I was reading. It's 5 reasons why. A lot of people saying why it fell, but I think the answers lie somewhere within this article. So 5 key reasons why Bitcoin fell from 98 to 92 and now 88.9. So let's get into it. So cascading, liquidations, and BitMEX. I don't know too much about BitMEX. I don't get involved with this kind of trading, this kind of leverage trading. Let's see what they say. Last 18 hours, around 53 million worth of longs were liquidated on BitMEX alone. It indicates traders are largely expecting the price of Bitcoin to reclaim the 10K in the near term. But as we know, Bitcoin usually does the opposite of what everyone thinks it's going to do, because it's highly manipulated. Instead, the price of Bitcoin rejected 9,800 with a sell-off, taking BTC down to around 9,300 initially within a span of an hour. They say for the past week, we've been bouncing between $98 and $9,200 with slight deviations. Good levels to play if you like a good range. 98.50 is preceded by several HTF resistances, but after 10.5 we should see fireworks. Should 92.50 break, I expect mid 8,000s. So who said this? Cryptocurrency trader Karush AK. So just some trader out there. So for whatever that's worth. So here's an interesting one. Whales using the false Satoshi narrative to seek liquidity. So there was this 50 Bitcoin that they saw moved. What's the name of that Twitter feed? Whales Whale alert. I get these alerts too. Whenever a significant amount of Bitcoin is moved from one wallet to another, or from an exchange to a private wallet, or vice versa, it pops up on that Twitter feed. So they saw this. This is an old wallet. This goes back to some of the original wallets that mined Bitcoin in the early days. So that's why people suspected it might be Satoshi that moved it, which would have been a significant event, but they're saying that's not the case. Let's see, the lackluster data did not stop whales from using the narrative to stir up volatility in the market. So I guess people who are looking to sell anyway at these prices, when Bitcoin's way up here on the top of the wedge, they're looking to a reason for the price to tank. So they just use that narrative of now, everyone's seeing that 50 Bitcoin move and they're all getting nervous about it. So they'll just sell into that, hopefully to cause a panic and then pick up cheaper Bitcoin later. Like I said, it's really manipulated. There's also been an uptick in miners selling that they're seeing here. According to data from ByteTree, the miners' rolling inventory is at 102.8%. If the MRI crosses around 80%, it shows miners are selling the BTC that they mine rather than holding on to it. So in case you didn't know how the whole difficulty mining thing works, Bitcoin's difficulty is designed to adjust every 2016 blocks, so roughly around every 2 weeks. This is in order to ensure the network continues to solve new blocks and keep the transactions within around 10 minutes. So more miners means more hash rate, means more difficulty. Less miners means less hash rate, less difficulty. If you think about it, this is really a genius way to self-regulate the economy. So for example, let's say mining is at a point where it's really profitable. This leads to more miners joining the network because they're spreading the word. People are getting excited. They want to get on this Bitcoin train. So this increases the hash rate or the mining power on the network to mine Bitcoin as more and more miners are joining. More miners causes the Bitcoin to self-adjust the difficulty to make it higher, because they can't have all these people mining easy Bitcoin. They got to make it more difficult. This causes the profitability for the miners to get thinner, so their margins get lower because the difficulty gets higher. They have to spread the wealth, so to speak, to other miners. Eventually, it gets so thin that the miners are forced to sell the Bitcoin that they've been holding on to, just to stay afloat, and that increases the supply, and of course that's going to lower the price. At some point, those miners are going to have to drop out completely because they just can't sustain it. It's just like any other business. If you're not profitable, you only can stay in the red for so long. So when they do that, that lowers the hash rate again because now there's less miners. So Bitcoin then again comes in, adjusts the difficulty to make it easier to mine the Bitcoins because less people are mining it, and that makes it more profitable for the miners that are still able to hold out. This reduction of the difficulty has been linked by some of the experts as a leading indicator that the price is going to fall. So that's what we're seeing here, and they're using this as a possible reason for the price to tank, and I think it's a very valid reason. There's also been a rising USDT withdrawal, so people are taking their Tether or digital cash. People are withdrawing this off the exchanges. Tether is widely utilized as an alternative to digital cash, especially in regions with restrictive access to cryptocurrency exchange markets such as China. What this could be just people are hurting and they need to pull their cash off of the exchanges to spend because the unemployment rate's high. We're in a financial crisis. People need to do what they need to do. The other reason here is the options market is expanding, fueling volatility. So this is bad for Bitcoin. Well, it's good if you're a trader because it's going to bring volatility to the market. Things like futures, things like options, buying calls and puts, where it's basically gambling. You can gamble whether it's going to go up or gamble whether it's going to go down. Leverage trading, all this stuff increases the volatility. It makes Bitcoin kind of as manipulated as the gold price is, because it's more than just the asset itself. Now you're dealing with the paper derivatives that can be manipulated. So what other articles were there about this? This talks about the hash rate. I already explained that, how hash rate works. And this article here, they didn't really explain why this is. You got to take this with a grain of salt, but they're saying slowing Bitcoin buying trend expected as experts predict worse U.S.-China relations. So in the past, we've seen whenever there's turmoil between the trade agreement between the U.S. and China, the Bitcoin price goes up. You can see that on the chart. Every time there were news articles talking about the trade war, the price of Bitcoin would go up. And whenever they talked about progress, or Trump made an announcement that there's progress in the trade war and in an agreement, then the price would go down, which goes with my assumption that Bitcoin is a hedge against the economy, not a hedge against the stock market, but a hedge against the U.S. dollar. Anytime there's any kind of turmoil having to do with fiat currencies, no matter if it's U.S. or the euro, you'll see that correlate with an increase in the Bitcoin activity. The price will go up, and whenever the dollar goes up in value, whenever there's good news having to do with the economy, then Bitcoin will drop. So they're saying here that increase in turmoil and within the relationship of the U.S. and China, that it's going to be bearish for Bitcoin. That doesn't make any sense. And I read this whole article and I didn't see anything where they're showing evidence of that or why that would happen. And then at the very, very end, they say they compare it to gold, and then they say both assets are at risk of more downside as U.S. and China issues continue to grow. However, the downside is likely only temporary, as hyperinflation will eventually cause these assets to rise due to their scarce, limited supplies. Exactly, and that's what I'm saying. I don't understand why they think it would be bearish in the short term when we know it's going to be bullish in the long term. Maybe because with everything else on top of it, people are worried about the economy, and maybe they'll sell their Bitcoin to sorry, people are texting me. Maybe they'll sell their Bitcoin to cash because they're worried. I don't know. So anyway, OMG has been an OMG because this was such a good trade. It has just been on a tear. I picked it up around here. I talked about it in my last video. Where was it? I bought right about here. I traded my Digibyte. Take a look at Digibyte right now. Look at that. So is that a good trade or what? Yeah, so I'm just going to stay in it. This green line here was my target. That gave me about, let's see, it should be over 50%. So that would have been right there, a 63% gain from that trade in just a few days. That's awesome. You can't ask for better than that. And in fact, I should pull profits here, but this candle just doesn't want to stop. So right now I'm at 75%. And I don't know, maybe we'll hit 100. But I don't know. I may chicken out. I may pull 50%. The smart thing to do is to pull 50% profit and just put it in Tether. Just sit in Tether until Bitcoin starts to go up again. We got to see what happens. If it breaks this wedge, then I'll be in Tether until I start seeing a setup again for Bitcoin. So if it breaks this wedge, then the next resistance I would see is right here. This yellow line. So we'll just keep a close eye on it. So hey, my candle's going back up. I need to hit the ATM. I'll catch you guys later.